Welcome back. So the market continues to track a fair amount of green, about 0.5% up on the Nifty, and the mid-caps are doing even better. So it's turned out to be a good afternoon after all. Let's go across to Hormaz. He's lined up the list of today's buzzers. Hormaz, what's on your radar?
It's been a while since you found that you were spoiled for choice today in terms of trying to find out movers on the upside in today's session. But a lot of the movers today are not moving on significantly high volumes, but the ones they are include Shakti Pumps. Of course, it's a news flow based move. The stock at one point was up around 16%, still holding on to gains of 14. It snapped an 8-day losing streak today, the biggest single day gain since January of 24. And the volumes are the highest since October of 23, with close to 2 crore shares being traded in today's session. The 20-day average is less than 5 lakh shares, so almost 40x of the 20-day average. The stock, though, despite today's move, remains below its key moving averages. The turnover today almost close to 1,000 crores, which is a third of its free float market cap as well. Stock down 40% so far in 2025, but had gone up 6x in 2024. So keep that in mind for Shakti Pumps. Rico Auto too has snapped a 7-day losing streak today. 15% higher on the stock, the biggest single day gain since Jan. For over 4 crore shares have been traded today. The 20-day average is around 1 crore shares, so 4x, and it's trading above its key moving averages since the 14th of November, so it has sustained above those levels, and the stock is up 40% so far this year, turning out to be the best one since 2022. And the last one on the list, though, is one stock that is possibly the only one that has survived this broader market sell-off in these last 8 to 10 sessions, that is Ramco Systems. Today is the 8th straight day of gains for the stock. The volumes are the highest in the last 2 months. 5.5 lakh shares traded today. The 20-day average is only 64,000 shares, and the stock is above its key moving averages, has gained in 4 out of the last 5 months, and in the last 3 years, the stock is up almost 2.5 times in value, including a 55% up move so far in 2025.
Okay, all right. Hormaz, thank you very much for that. So lots of buzzers as always. With that, let's welcome in Aman Chowhan, fund manager at Abakkus Asset Managers, joining us on the show today. Aman, great to have you in, and good to be looking back at a year that was definitely challenging. And we were just having this conversation before you joined in. We had a rupee guest with us. This whole business of FPI selling, the market being range bound, India being this unloved non-AI market. I mean, is there any sense you have on whether some of this at least starts changing? Either earnings pick up or we get that deal. Something has to change for 26 to be better than 25, right?
Right. I think earnings will pick up. GDP has already picked up and earnings soon will start to pick up, but it's going to be very selective. We are seeing some fatigue in the IPO markets. The smaller companies that are getting listed, almost 70-80% of them are now below the IPO price, right? So the supply should also reduce, and the appetite of money which is going towards this market will also reduce, which means more of SIP and domestic flows goes to the secondary market. That should help. I think there's enough liquidity in the market. It's just sentiment that is still not great because you have not made money for a long period of time. Once people start to sense that, money will be back in the mid and small cap. Large cap has still done well, and I think that should continue. And the only reason wherever there's earnings growth, those stocks will do well. So there's decent chance that 26 will be much better than 25. The fear of INR depreciation is also going to be behind us. So enough reasons for FIs to relook at India. And that's probably what the case is. Ultimately, people invest in India for growth, whether it is domestic guys, FIs, or whoever it is. So once growth rate picks up, money should be back, and so is the market returns. So that's broadly what the call for 26 would be.
That's right, Aman. But getting into this Christmas week, it's not feeling too much like Christmas, right? Last couple of weeks have been harsh, actually, on the broader markets. Stocks falling down 10, 15, 20% as well. And frontline names, the EMS names, the aviation names as well. I think we'll have to keep tracking that, the margin funding book as well, which has ballooned up. Some kind of, cool off from there will actually make the mood much better. Let's see how much pain, though, we have to go through on that front. Aman, let's discuss these couple of sectors that have fallen off the cliff. EMS as well as aviation, you have just one large leader out there. What's your exposure to either of these spaces? Do you all have some exposure?
Minimal. Nothing in aviation. EMS would be less than 5%, or even, I think, less than even 3%.
All right. And will you look at topping up on these EMS companies after the kind of fall that we've seen?
They are definitely looking good. The issue we had with EMS companies was that they were priced to perfection. right? And hence even a small disappointment meant 30-40% correction, which has happened. For some companies, the EC season was not so good. For some companies, something else happened, right? So now the sector is attractive. There's decent growth in that. I think next year stock should bounce back, but they're not going back to the old level. They are not going back to the 60, 70 Ps that they got. If you get something around 25, 30 P, you could ride it up to 40, 45 P. That should be the game now in this company. So we have a small investment. We will look to top it up soon, but with a very clear view that we'll make 20, 30, 40% return, and that's about it.
So, but risk reward is favorable post this correction that we've seen, right?
Correct.
All right.
The aviation, we don't have a holding, and I think there's a risk of P derating happening there, in spite you being the leader there, because there is now a fear that the government would want to control your market share. They would not like you to go beyond the 60-65% market share that you have, which is not something. You will still grow because the aviation market will grow. But if you are going to grow as much as the industry is, you're not going to get the multiples that you're getting now, and hence not yet looking at the aviation.
Okay, all right. What about the telecom space? For those that have enough of conviction and risk-taking appetite, then the Vodafone Idea is a stock actually that's pulled back from the recent lows. It's a tricky one, but once it's crossed that 11 rupee mark, I think things will get even more interesting from here on, because that supply would be at around 11 rupees. How are you all playing telecom as a space? You have Jio that's likely to come up with an IPO. Bharti Airtel has done pretty well. And then Vodafone Idea. What's the exposure? Or I don't know whether you'll have it via Industars as well.
Yeah, so in some funds, we have 2-3 telco names. In most of the funds, we have one of the large telcos. Pretty positive on that. We have been holding it since years now. Decent returns. We'll held on to it. We don't have the coming IPO. Maybe once the IPO comes in and we know the valuation and when it is coming, we'll have a relook at that. But overall, very positive on the sector. I think earnings growth here will be much higher than what the top line growth would be. There is going to be some, you can say, ARPU gains coming in, and that should bode well. Of late, there has been a supply also coming because promoters have been selling. There have been overfaces also. That should also normalize. So overall, pretty positive. We don't have the third company. It's trade for us, which we don't do in the fund. So maybe, as you mentioned, 10, 11 goes to 12, 13, maybe. I have no clue there, but we don't have any exposure there, nor intend to get into.
Aman, do you have, afternoon, Rima here. Do you have any oil and gas stocks which get negatively impacted on account of rupee depreciation? And if yes, how are you assessing the sharp decline?
No oil and gas exposure at all. And it's been there since many quarters now. No exposure, not looking to add anything in that space right now. It's not just rupee, it's to control a sector with very little triggers to look into. So that's the reason, completely off that sector.
Okay, so oil and gas is a pass to regulated for you. Which sector or theme do you think will give maximum returns in 2026?
Financials is consensus. I believe non-fund based financials can do well because your wealth management companies, EMC companies, broking companies, they all held down. Markets have not been so great. If you are building a scenario where the markets will deliver a 10, 15, 20% return in CY26, then these stocks logically should do well. So that is one segment. Pharma, we are pretty excited. Chemicals is something that is what we are gaining on. Metals, I think, has played out. It's high single-digit exposure in our funds, done well for us. Maybe that rally can continue. I'm not very sure whether it will be in the top three, but financials, pharma, and chemicals would be our top three sectoral bets for now.
And very quickly, ICICI Pru AMC, that opens tomorrow. Have you done any analysis?
Looks good. It will be trading at market cap closer to the HDFC AMC, and with a better earnings profile, I think there should be some listing gains. And then post that, then it's going to be normal as to how the market does well. Based on that, the stock should be carrying on. So expecting some listing gains for that name.
Thank you, Aman. Great conversation. ICICI Pru AMC IPO opens tomorrow. Market cap is at 1.07 lakh crore, while HDFC AMC is about 1.17 lakh crore. So pretty similar. But as Aman